Hello, my name is Steve Bigelow with the Candlestick Forum. Markets relatively indecisive. The Dow is setting up for a potential J-hook pattern. And when I say potential, using candlestick signals and patterns, we have a much greater advantage to see whether that pattern is going to be set up or not. Look at the doji that formed today in the Dow. We have a doji rule. The price will usually move in the direction of how they open after a doji. So if they open positive tomorrow, we wake up and see the pre-market futures are positive, there's a good indication that the J-hook pattern's in progress. If they open it lower, telling us the J-hook's not working, that tells us our downward drift may still be in progress. But more compelling was over here in the NASDAQ, where that J-hook pattern was setting up, but it was setting up with a bullish flutter kicker signal, one of your strongest reversal signals. And notice today, when it backed off, it used the T-line as support and came back up. Also very, very relevant to see how the market's open tomorrow. But here's what we always get questioned about. How do you keep picking out where the strong sectors are, even when the market's lethargic? And that's very simple. We've got patterns that we can see that a sector or a stock is breaking out. For example, the exact timing for buying Lucid was when it did a trend kicker signal, breaking out of a fry pan bottom, staying above the T-line. And how long do you stay in these trades? As long as they can't close below the T-line. So after the breakout, there was pullbacks, but you stayed with it because it's never closed below the T-line. Today, they reported earnings and they were trading up here after hours. So even though you get whipsawed, that last criteria of staying above the T-line or using the T-line as a support level keeps you from having that anxiety of whether I should get out. As long as it stays above the T-line, you stay with it. Same scenario, you can tell when a whole sector is acting well when there's lots of patterns showing up, like Blink. We also had QuantumScape showing good strength. Fisker was showing good strength. But notice where the breakout occurred of this fry pan bottom. A couple weeks back when Blink gapped up, breaking through this level, doing kind of a trend kicker signal. And that was still evident that you could stay long on this as long as they didn't close below the T-line. And then you could see today was up another 17%. This is to illustrate the fact that once you see a pattern breakout and you use the T-line in conjunction with candlestick signals and patterns, that combination gives you a very powerful trading strategy, one, and two, it keeps your emotions out of your trading. You don't have to worry about getting whipsawed in and out. So the T-line has very strong specifications. You stay long as it stays above the T-line, but you start getting a little bit concerned when you start moving too far away from the T-line. So not only does the T-line tell you when to stay in, but it allows you to see when it's time to take profits, as we saw in the NVIDIA chart. Use the T-line and the 3T line as support. But when it moved that far away from the T-line and started backing off, that was pretty good evidence that the bears were starting to take control. It was time to take profits. And as you can see, after that, there hasn't been anything of any great consequence. So the strong signals and patterns, as illustrated in a best friend signal, a doji gap up, we call it your best friend because not only when you see a best friend, you have an extremely high probability you're going to be moving in that direction, but the magnitude of the move is going to be relatively strong. I'm sorry, this is the wrong signal. It should have been MRAM instead of MARA. So MRAM had a breakout on Friday, but here's the question that you have to ask yourself. Where do I buy? Do I buy here? Buy here, buy here, am I chasing? That's all simplified by just merely going to your 10-minute chart saying, well, they're still above the 10-minute T line. You could be buying here, you could be buying here, you could be buying here. And as you can see, they didn't sell off for the rest of the day. So everything that is built into a candlestick chart is just common sense. What is it doing on an intraday basis using the 10-minute T line? What's it doing on the daily chart that tells us it's time to buy? So the strong price moves, you can modify or get rid of your anxiety of when you should be buying by using the shorter time frame. The 10-minute chart seems to be the bellwether. So that best friend signal works both in the positive direction as well as in the bearish direction. Apps, we recommended going short because of your bearish best friend. And as you can see, even though the market was not doing much of anything today, this is still in a downtrend. And how long do we stay short? As long as it stays below the T line and doesn't provide a buy signal. So all this is just common sense put into a graphic depiction showing you exactly what's going on in investor sentiment based upon the signals, the patterns, and where everything is in relation to the T line. So tomorrow becomes very simple. Using the doji rule, if we wake up and the pre-market futures are showing positive, good indication that a J-hook pattern is in progress. If it opens lower, tells us our downtrend is probably still in progress or going back into progress. We're going to be demonstrating to our members tonight which sectors are acting the strongest and the weakest, just based upon what the signals and patterns are showing on a sector by sector basis. That'll be it. We'll see you in the chat rooms.